SwayamPrabha. Digital India. Educated India.
Hello dear learners, welcome again to another lecture of the course Fundamentals of Public Economics. See, in the past two lectures we have dealt with what is public economics, what is the subject matter of public economics, an important concept of public good and how the allocation of public good is done. We have gone through the three theories of public good allocation, that is the marginal utility approach, the voluntary exchange approach and the Samuelson approach, that is the modern theory of public economics. Now, as you know, in the past lectures, we have dealt with what constitutes the policies, the fiscal policy, what constitute public economics. So, one by one, we will be dealing with each element, each component of public economics. So, let us start with the first and foremost component, that is taxation. So, today's lecture would be an introduction to taxation. In today's lecture, the topics covered would include public revenue, what is all about revenue, what is the income of the government, what are the various principles or canons of taxation which are important while dealing with the structure of taxation and different types of taxes. So learners, let us start with the today's session. Now, when we say public revenue, what does public mean? Earlier also I have told you, public is basically government, that is the government's revenue. Now, to be simple and precise, in a larger sense, government revenue would mean income. See, as Dalton said, income of the public authority, either in broader sense or in narrower sense. What is the government earning? What is the income of the government? See, when we talk in broader sense, a wider sense, we say incomings or receipts from any source is revenue, to be simple. But a narrower sense and a more specific sense, when we talk of what does revenue word literally mean. So, revenue not only includes those receipts which are included in ordinary concept of revenue. That means revenue means, the literal meaning of a word revenue is those receipts, revenue receipts when we talk of, revenue income when we talk of, those receipts which are recurring in nature. Now, what does recurring means? Recurring means any sort of item, maybe of revenue or expenditure, that has a continuous or a regular nature. So, when we say the revenue receipts of the government, that means whatever income the government is getting, that income is of the recurring nature, a continuous nature. For example, tax. Every time a person purchases any good, he or she is paying a tax, so that is a recurring nature. We are earning in the form of salaries, in the form of maybe capital gains, in the form of income from business and profession. The taxation given is on a regular basis. Annually, we know the taxes given to the government as per the structure of the taxation system, and the TDS, that is tax deduction at source, is also cut from the source where the income is being generated. So, it has a regular nature. So, revenue, when we say, can be both. When we talk of receipts, basically the income can be both revenue nature and capital nature. Revenue nature we have discussed. Capital nature is basically those receipts of the government that implies further creation of assets or long-term assets, like any kind of debt that is undertaken by the government, once it has taken the debt for a longer period of time, that is the capital receipts by the government. So, today we will be specifically dealing with the revenue receipts. So, revenue receipts, when we talk of, are derived from taxes of different form, as I told you. And capital receipts basically includes internal borrowings, as I told you, and external borrowings, that is the debt or the loan taken by the government, that is for a longer period of time, and that can be used for further creation of assets or capital in the economy. So, a few classification of revenue by eminent economists include Dalton's classification. What he said was that the main source of public revenue, that is the government's revenue, that is the government's income, is taxation and prices. Either in the form of taxation, the government is getting income, as I described you, or in the form of prices. See, government also runs PSUs, that is the public sector undertakings or public sector enterprises. In these PSUs, what happens is, government is producing various goods, government is providing various services, and for those goods, us are the purchasers, we pay the price for those goods. So, price also becomes a part of income and revenue to the government, and that is probably the revenue receipts. In words of Seligman, if we classify public revenue, what he said was that government's revenue should be under the following heads. The first and foremost is gratuitous. That means out of gratitude, if the government, if we are paying to the government or giving grants to the government, maybe any kind of, sometimes in a form of calamity is there, in the natural calamity is there in the economy, at that period of time, if the funds are given to the government to deal with that calamity, maybe flood, maybe famine, any kind of natural, maybe an earthquake or so, out of gratitude, out of concern for the economy, certain grants are given, those are also a part of revenue, although the nature changes, but it is a revenue to the government. Next is your contractual. If the government has given a land on lease, maybe a hospital or a educational institution, it happens that many lands are given by the government on lease purpose to various institutions, like maybe hospital and in a school or higher education or colleges are there. So, for that piece of land which is given as on lease, what happens is, a rent is given to the government. Obviously, when you are giving a land on lease, a rent arises out of, because the return for the land is rent, we know in factors of production. So, some rent is given to the government, that forms a part of revenue to the government, and as per Seligman, it is a contractual part. Then a compulsory revenue in the form of taxes, maybe in the form of fees, etc., maybe administrative fees, any form of tax, maybe direct or indirect, becomes the compulsory part of revenue. As per Taylor classification, he divided government's revenue into 4 parts, 4 categories. First is taxes. We will be dealing with taxes in detail in this lecture. Then is your administrative revenue, your commercial revenue, and grants and gifts. One by one we will be dealing in this, and to a larger extent we will be dealing in taxes. So, let us start with taxes. See, when we talk of administrative revenue, that also becomes a part of taxes. What happens is, the slide which I am showing you is tax. When the government receives revenue, see, whatever revenue is received by the government, it is in 2 forms. One is non-tax revenue and the other one is tax revenue. Now, why I have made this slide like this, that we say government's income or government's revenue has 2 major sources, tax and non-tax. Out of this, tax forms the largest portion of revenue to the government. Non-tax revenue is also there, but tax becomes the largest source. So, the weightage of taxation, the revenue earned, becomes higher in government's income than the non-tax revenue. So, let us start with tax and non-tax revenue. any revenue which is not a part of tax. See, what is tax? It becomes a compulsory payment on an individual that is levied by the government. Anything which is not a part of tax is considered as non-tax revenue. So, any revenue which is not out of tax becomes non-tax revenue. So, let us start one by one with non-tax revenue, then we will be coming to tax revenue since it is the largest source, so it will be dealt in detail as well. First and foremost is the administrative revenue. As the name suggests, what does it tell? Basically, this kind of revenue, that is the administrative revenue, is arising as a byproduct. As a byproduct of what? As a byproduct of administrative function of the government. Government performs various administrative function. Maybe handling fees is there, specific form charges are there, for maintenance of office we are giving the fees, various transactions we are paying off. So, what kind of administrative fees the government is charging? This administrative revenue is further divided into fees, license fees, fine and penalty. There are few more we will be discussing. So, let us start with fees. Now, what kind of fees? Any kind of fees or payment charged by the government to bear the cost of administrative services like the registration fees. See, what do we do when we buy certain things? Suppose we are buying a house, we have to pay the registration fees for the same. Any firm is being opened, we have to pay the registration fees. Many times court fees is paid as a part of registration fees. So, all this comes in fees, or any fees to be the, as far as the literal meaning, we are into a government run institution, that is the government is governing, we are paying our annual fees, that would be also a part of fees, not only registration fees is there. So, all this becomes the part of fees. Second is any kind of license fees, that is a permission given. If you are opening an industry, so what happens is you have to seek permission from the government as to what will be the layout as per the industrial licensing policy. License has to be given. Or when we want a driving license for a two-wheeler or a four-wheeler, we go to the license office and seek permission after giving the trial or the testing that we are eligible for driving on roads. So, motor vehicle license is given. So, all these are license fees. Or running an small coaching, maybe you have to seek the permission and take the license. For shops also we have to take the license. So, all these comes under license fees, that means granting a permission or privilege. Then it becomes fine and penalty. As the name is very clear, if we are violating any rule, we need to pay the fine, we need to pay the penalty. Maximum times when you see violation of traffic rules in the form, when we are driving a two-wheeler and you are not wearing a helmet, or a specific speed is crossed, or when you are driving a four-wheeler and you are not wearing a seat belt in that, you are not having the papers, when the checking is there, pollution control certificate is not there. So, these are all few traffic rules. If you are violating that rules, we need to pay the fine or penalties. Similarly, income tax, we are not supposed, there was a scheme of government that was voluntary disclosure scheme, VDS 1 and 2 was there. So, in that what happened was, if you have not declared a certain part of your income, it was given as an option by the government, you declare your income, pay fine and penalty on that income, pay tax on that income, and then the income would be converted into whatever we say the tax payable income, proper income, it would be converted. So, because we have not declared the income, what happens is fine and penalty is imposed. If you are characterized, but if you are you need to correct your income, which you have not declared, you have to give the fine or penalty, and then the income is proper and corrected by the government. Another form of administrative fees go to forfeiters. Forfeiters is basically penalty is imposed by, say, our judiciary, competent authority like courts, for the failure of individual appears. If your appeal is there and your hearing is there and you don't appear before the court, a forfeiting fees is being imposed as a part of administrative fees. Then you have escheat. What does escheat means? Escheat is basically claim of the state. See, when I am talking of government, it is common for center as well as the state. These fees constitute, non-tax revenue constitute both for center and state. I am not segregating between center and state as for now. So, claim of the state to the property who die without a legal hire. If a property is without a legal hire, it is not passed, it is not inherited, or the document or the will of the property is not proper, or the papers of the property is not proper. So, under the right of escheat, what state can do? The government can acquire this unclaimed property of dissolved, maybe educational institution or a trust, if the property is not claimed. So, that becomes the part of escheat. That also becomes a form of non-tax revenue to the government. Apart from that, we have special assessments. Special assessment basically means charged, imposed on property benefited for community benefits. So, that becomes any property that can be used for community benefits and a certain amount of charge is imposed onto that, that becomes the part of special assessment. So, all these come under administrative revenue. Another form is the commercial revenue. See, so in words of Taylor, how can we define commercial revenue? Commercial revenue, which we call any revenue, is received in the form of price paid for government produced commodity and services. As I told you, as Seligman also said, or Dalton said, there are two forms of revenue, tax and price. So, price is your commercial revenue. There are like many government firms that are running, many public sector undertakings and enterprises they are running. So, what they do? They produce goods and services, and for those goods and services, the price which we are as an individual are paying becomes the part of commercial revenue, especially when we talk of postages. See, post offices are run, various post offices are run by the government. So, the registry charge, the speed post charge, or various post office services if we are availing, that is the payment we are giving, becomes the part of commercial revenue. That is the service that the government is rendering, that the product, the service in the form of those speed post or registered post that the government is giving to us. Apart from that, commercial revenue also includes tolls which we pay while we are changing the states, while we are crossing the districts. So, on expressways we pay the toll charges, that also becomes the part of commercial revenue. Then we have interest on fund borrowers. If the government takes fund, it gives funds also, it gives loans also, it gives debt also, and for that debt the government receives interest payment, because we all know the capital, the return on capital is interest. So, whatever debt the government is giving in the form of capital, the receipt the government gets is interest. That is also of a recurring nature. So, interest on fund borrowed. Or electricity distribution by publicly owned utilities, the charges which we are paying for electricity, etc. All these come under commercial revenue. Even the profits from public undertakings, see, when government runs and public undertakings, it is getting the revenue in the form of price as well as the profit the firm is earning for those goods and services, holds a part of commercial revenue. Another form of public revenue is borrowings. So, in modern world we say one of the methods of raising public revenue is borrowings or debt or loan that the government is taken, and we know that government can borrow within the country, that becomes the internal debt, and government can borrow outside the country, that becomes the external debt. So, as far as India is concerned, the central government can take debts internally and externally both. However, the state government cannot take the debt externally. from international funds or international countries, the state government cannot take, the central government can take the debts. So debts can be raised, although they become liability. However, the debt also forms the part of the borrowings, also form the part of the government revenue, for which the government is paying interest to us. Internal form of debt may include a bank FD, internal form of debt may include a PPF or any such kind of things in which the individual put in their money and give loan to the government. Apart from that, government can take from financial institutions, for commercial banks, from RBI, the government, central government can take loans. Internally, they can raise the, even the state government can take the loan from the central government internally. However, externally, only central government can take the loan. Another form of non-tax revenue holds are gifts and grants. As I told you earlier, gratuitous gifts. So, why gratuitous? Because they are voluntary contributions. Why gratuitous? Because they are voluntary contributions. From whom? From private individuals maybe, or non-government organizations, maybe NGOs can give it to government. I told you, any kind of relief fund or defense fund during the war, for the assistance of emergency, for the assistance of allocation of resources, for the assistance of raising resources. Any kind of flood is there, suppose in a particular area, so basic necessities should reach the people, because when it is all flood, people are not able to get the basic necessities as well. So if the war is there, various kind of resources has to be diverted to the place where war is taking place, because a specific assistance in the form of resources is of high priority in those areas. So these kinds of grants are given by individuals as well as the non-government organizations. As I told you, any kind of natural calamity, to overcome deficiency, these grants are given. Grant in aid is also a method by which government provides financial assistance to others. Government also provide, like center provides grant and aid assistance to state government, that is clearly given in the Finance Commission, which will be dealing in further lectures. Finance Commission, the central government gives state government various conditional grants, various unconditional grants. So there are many grants for assistance, for developmental projects, for growth. Grants are also given apart from natural calamities. Now, those were the non-tax revenue. That means the commercial revenue, the administrative fees, public borrowings, profits from public sector undertakings, and gifts and grants, granted aids. These hold the part of non-tax revenue sources to the government. Now, we come to one of the important and largest source of revenue to the government, that is the tax revenue. So, when we define tax, how do we define? See, we say you earn, you give tax. You don't earn, you don't give tax, especially with the case of direct tax. So, what is tax? 2-3 important things are there when we say, when we define tax. First and foremost, it is a compulsory payment. A compulsory payment that we need to pay to the government. And who emphasizes this compulsory payment? It is levied by the government. Government emphasizes on whom? On the individuals, on the SSCs, on the taxpayers who are earning and had to pay tax, and without any direct real benefit to the taxpayer. Now, what does that mean when we say without any direct real benefit to the taxpayer? See, maybe I might be paying the taxes to the government because I am earning salary and I pay taxes to the government as a part of income tax, but it is not necessary at all that whatever tax or what amount of tax I am paying, I receive the benefit according to the amount paid by me as tax. Because here no cost benefit analysis is there. I cannot say I am paying this much amount of tax, so I should receive this much amount of benefit. Therefore, the basic definition of taxation says without any direct real benefit to the taxpayer. In words of Dalton, for a specific definition, we can say it is a compulsory contribution, again, that is imposed by public authorities, irrespective, as I told you, of the exact amount of service to the taxpayer in return, and not imposed as a penalty for legal offence. See, tax is something, although it is a compulsory payment, but tax is imposed not out of any legal offence that we have done. Fine and penalties is okay, but tax is just a part of the structure, the economy. We are earning from this economy and we need to pay as a part of resource to the government. So Taussig opines that, what does he say? Essence of tax as distinguished from other charges. Essence of tax, that basic nature of taxes, what is different from other charges, that although I am paying the tax, but there is absence of direct quid pro quo. What does this quid pro quo means? Quid pro quo means without any direct real benefit to the taxpayer. As I explained you earlier, the amount of tax we are giving, the benefit received is not necessary that we are receiving the same amount of benefit, or either we are receiving the benefit for that amount of tax we are paying. So there is absence of direct quid pro quo between the taxpayer and the public authority. I cannot think that government has a 100% liability to benefit me if I am the honest taxpayer. Now, the tax has certain characteristics or features. The first and foremost, as the definition says, it is a compulsory payment that is imposed by the government. So it is a payment to the government by the people. Since government imposes the tax on us according to a structure, according to a rate, according to the taxation system, according to a specific act of taxation. As far as India is concerned, Income Tax Act 1961 is imposed on us. Still, direct tax code was proposed, but Income Tax Act is imposed on us. So, whom we are paying the taxes? It is a basic characteristics of tax, that tax is paid to the government by the people. So, we are the people, we are the citizens, or in a language of taxation, we are the SECs on whom the tax is being imposed. Now, when we say tax is paid by the people to the government, tax, especially with the case of direct tax, tax involves an element of sacrifice. See, we do expect, although the government is not liable for any kind of benefit directly to the taxpayer who the tax is paying, but tax involves always a kind of sacrifice to us. We feel a little, as a taxpayer, I am telling you the feeling, although it becomes our responsibility, a little pain is there that we are paying so much amount of tax. It is with everyone. You can listen this around whenever the budget is given, whenever the tax comes, when we are paying the advance tax, when we are paying ITRs, when we are filing of us. So it always involves an element of sacrifice as a reaction of taxpayer. Howsoever, the aim of tax involves what? Although the element of sacrifice is there on the part of the taxpayer, not on the part of the government, I am telling, but the aim, the exact aim of raising the tax revenue is public welfare. See, yesterday, in the earlier lecture also we have discussed that when the government spends, from where the government will spend, from where the government will provide public goods, from where the government will undertake all the liabilities, off budget liability, on budget liabilities, obviously the government requires revenue. That is the source of income. So, and what is the aim, objective of this income? Taking the income is public welfare, community welfare, social welfare. Obviously, all these things are provided for economic welfare of the people. So, aim is always public welfare. Benefit received is not directly the return of tax, as we have discussed this earlier, without any quid pro quo. Furthermore, taxes, be direct or indirect, is paid out of the income. Whatever we are earning, we are paying the tax. It is a legal provision. Constitutionally, we have to pay the tax. The tax is imposed on us according to the Finance Act. Every year the budget is presented, and when the budget is passed, it becomes an act. and taxes are paid by the individual and other entities. It can be a firm, it is individual, there are various entities who are paying, they are taxable entities, liable entities on whom the tax is imposed, and tax is not the cost of benefit. As I told you earlier, when we are paying the tax, we cannot do cost benefit analysis as to where we are, how much the tax we are paying, the benefit received should be equal to the same amount. So, cash tax is not the cost of benefit. So, these are the few characteristics or features of taxation. Now, the aim, objective of taxation includes first and foremost source of revenue to the government. So, public revenue becomes the aim of taxation, that is the revenue aspect in taxation, why the taxation is imposed. Second most important thing becomes regulation and control. See, by imposing taxes, although the government wants to raise revenue, but the government wants to regulate and control that also for achieving equity. Now, what is equity? When we say equity is, especially in public economics, we say similar people under similar circumstances are treated similarly and people under dissimilar circumstances are treated dissimilarly. Imagine a scenario in which the government is not taxing. So, what will happen? The difference between have and have nots will be very, very wide. And if too much money is given in the hands of people, if the purchasing power is too high, we are not saving, we will be spending more, the aggregate demand will, consumption expenditure would be very high, demand becomes high, supply would not, and prices will inflate like anything. See, it is whole a loop, and too much purchasing power or too much money supply in the hands of people can also lead to antisocial activities. Illegal activities will be much more promoted because you will have ample of money that will be spending in various such kind of activities. Maybe we can adapt certain habits which are not good for us. So, regulation and control becomes very important with the objective of equity as well. So, if regulation and control is there, reduction in inequalities of income and wealth can be achieved. Have and have nots, the difference can be reduced to certain extent, because when people are earning more, they are paying more taxes. If people are earning less, they are paying lesser amount of taxes. Furthermore, it helps in capital formation. Taxes are a source of revenue. A kind of capital expenditure is also done out of this revenue. If the government is spending on infrastructure, that is also a part of capital formation. Furthermore, government is giving, see, it is not only physical capital formation, it is also human capital formation. Government is providing various scholarships out of the revenue earned. When the scholarship is given so that the students can study at primary level, secondary level, higher education level, various scholarships are, even for research the scholarships are given by the government. This is all what? This is all human capital formation. So, capital formation is there. Increase in national income, tax also contribute to national income. So, national income increases, there is a buoyancy of tax, buoyancy is always calculated, that means changes in taxes leading to changes in national income. So, national income would increase if taxes are increased, tax revenue is increased, and as I told you, it would restrict unnecessary consumption. Unnecessary consumption would be reduced. Too much money will be spending here and there, which is not required also. So, a restriction on unnecessary consumption also becomes an important aspect and part. Now, when the taxes are imposed on us, there are few principles that should be kept in mind while imposition of taxes, because as I told you, taxation is always involves an element of sacrifice. So, that sacrifice should be reduced. People should not run from the taxes. With these objectives, few principles were framed. Principles of taxation, basically framing and employment of appropriate criteria in the development of tax structure. Tax structure that should not be a pain to you. Tax structure that should not indulge a feeling of sacrifice in an individual. Because owing to the compulsory nature of taxation, what happens is tax collection has a significant effect on our willingness to work, ability to work, everything. Ability to work, save, invest is impacted by taxation. And we have huge psychological impact also. So behavior of the individual, functioning of the economy, on every part of the economy, the tax raised, the tax imposed has a impact. So what principles should be kept in mind? What should be the criteria for imposing such taxes? And in this canons of taxation, one important economist in the field of economics, of the classical economics, father of economics, is Adam Smith. What he does was, he probably, why it is important, because canons given by Adam Smith holds a special position. He was the first to attempt the general statement of principles of canon. So canon of equality, ability, basically taxes should be imposed according to the individual's ability to pay, how much we are able to pay in the form of taxes. That means this canon should bring about equity, as I told you earlier. So equity and equality should be there while imposition of taxes. You are purchasing higher price good, pay higher amount of tax. You are earning high, pay high. Earning low, pay low. Then taxes should be imposed on the basis of certainty. Certainty basically means amount to be paid, time and method of payment should be clear and certain. See, when things are clear in our mind, we don't run from those things. So when the tax would be imposed, what is the structure of tax, how much tax, according to that. Therefore it happens now ki for the coming financial year, the budget is presented prior. So as an individual, when the budget becomes Finance Act and we enter into a new financial year, we already know for this year what will be the structure of tax, how our income will be taxed. It is very certain. So we can calculate our tax, we can plan our taxes according to that, we can plan our investment and saving according to that, so that the taxpayer is able to adjust his income and expenditure accordingly. So it is certain, and the way the taxation would be imposed, it should be convenience. That means levied at the time or manner which is most likely to be convenient to the contributor. We know when we have to pay the advance tax, we know when we have to file our income tax returns annually, when the whole year we have earned, then we are paying the taxes. So the time and manner, the manner in which it has become quite easy for us, as well as economical, canon of economy. Every tax we know that involves collection on the part of the government also. It has to manage various things, administer many things, so that the tax is collected, whole system is generated for collection of tax, and it involves cost. So that cost should be minimized. Other canons include taxes should have productivity, should yield revenue needed to meet the requirement of the state. State here means center or state government, any public authority. Taxes should be elastic, that is yield should grow along with the development of economy. It should be simple so that people can understand it. The laws should be clear to us and should be well coordinated, that there must be well stitched coordination between taxes imposed by different authorities. That means what taxes are imposed by center, what taxes are imposed by state, and few taxes in which both have a sharing. We are clear. See, we belong to a particular state, but if I am a central government employee, so center is taking taxes. So what will happen? Suppose if income, I give you an example of income tax. If a person is a central government employee and residing in a specific state, so if the clarity or the coordination is not there, then whom should tax, and an individual will pay to whom? So taxes imposed should be very clear. They should be flexible, no rigidity in the tax system. It can be quickly adjusted to the new conditions. If certain kind of crisis arises, emergency arises, the taxation should immediately be changed and should be flexible enough to adjust the changes. Canon of diversity is there, large variety of taxes so that it can touch all sections of the society. It should not be there that few sections are taxed thoroughly and few sections are left like this. So, taxes, the distribution should be tried to be more or less even. It should be neutral, should not have adverse effect on the economy, and taxpayers should not doubt about its desirability. Expediency should be there. That why a particular tax is imposed. The presence of that tax should not be doubted. So, few canons should be kept in mind, especially the first four which I discussed given by Adam Smith, that these criteria should be definitely kept in mind while designing a tax system. Now we come to types of taxes. There are few types of taxes, that is the direct tax, indirect tax, progressive, proportional, digressive, regressive, ad valorem and specific duty tax. So, we will be dealing one by one in these. First and foremost is direct tax. Now, what does direct tax means? See, as a student of economics, as a scholar of economics, we should precisely define direct tax. There are two things, one is impact and one is incidence. Impact is what? It is the first place on which the tax is imposed, and incidence is the final resting place of the tax. That means from which place the tax is given. We say if tax is imposed on a person A, that means the impact of tax is on person A and the same person is giving the tax, that means the incidence of tax is also on A individual, means the point of impact and incidence is on same individual, then it is a direct tax. So, direct tax is one which is paid by the person or individual on whom it is legally imposed, means impact and incidence of taxation is on the same individual, then it is called a direct tax. An example of direct tax is income tax. It is imposed on us and we are paying the taxes. The advantages of direct tax would include, it is economical, it tries to achieve equity, more people, higher earning, higher taxes, lower earning, lower taxes, no earning, no taxes. It is certain, we know when it is imposed, with what rate it is being imposed to us. It is elastic. As soon as the rates change, the tax, government is using its discretionary power and changing the tax rates, the revenue aspect also changes, the tax revenue earned also changes. It has a social impact and it has a distributive justice. See, social impact basically means when we are directly paying the taxes, now we are more interested how the tax is being spent, whether the government is doing welfare or not. The interest of taxpayers suddenly arises. So, it has a social impact. And distributive justice basically implies according to our ability to pay, the taxes are imposed on us. The objective is to reduce inequality. Disadvantages, we all know it is very unpopular because directly it is imposed on us. So, we don't like, we have a feeling of sacrifice, so it becomes very unpopular. Evasion is quite there. Evasion is not declaring your income and you are not paying the taxes with honesty. So, possibility of evasion arises. Tends to be arbitrary since it is imposed on us. So, we don't like it. So, many a times it becomes a problem and it has a narrow base. Narrow base in the sense when we talk specifically of direct taxes, those who are earning and that too after a specific tax, after a certain income, you are being taxed. Otherwise, exemption limit is also provided. So, everyone in case of direct tax is not being covered under tax net. So, sometimes it serves as a disadvantage. Now, the indirect tax, as Hartley said, if A individual the impact of tax is on A individual. However, the incidence of tax is on B. Then it is indirect tax. A tax in which impact and incidence are on different individual, that means A can shift this tax to B. So Hartley said taxes which are shifted quickly through commercial competition between consumer are indirect taxes, impact and incidence on different individuals. The merit includes convenience, it can be shifted. An example of indirect tax is GST, customs, or all example of indirect taxes. It can be shifted easily. It is more elastic, as suppose excise duty is increased, so the prices of the product increase. As soon as the price of the product increases, the manufacturer or the seller can shift the price on buyers or consumers. So elasticity is high. Evasion, no scope of evasion, because we are paying the price, we are purchasing, and the price inclusive of all taxes is there. Whenever you purchase certain things, at the back where MRP is written, you will find it written inclusive of all taxes. So no scope of evasion. Coverage is wide. Whosoever is purchasing a certain amount of thing, indirectly that person is paying the taxes. It is not that X is paying and Y is not paying. Every person who goes for any kind of good, who goes for any kind of services, who is manufacturer. So all these comes under no scope of evasion and wide coverage. It also promotes social welfare. Social welfare in the sense, if tax is imposed on that kind of product which is harmful for your health. So if you stop consuming, the prices become high because of imposition of tax, and you stop consuming that particular product, your health issues would be less. You are less prone to health issues. So a kind of social welfare is promoted, more popular obviously than direct tax. However, demerits include regressive in nature. It is uncertain, prices change. Many a times we go to the shop and buy a product, the prices you see, and you ask the shopkeeper why the prices have increased. So one common answer that is given, manufacturer has given us a high price because the taxes are increased, maybe because, or the change in the prices of raw material is there. So are very uncertain and inflationary in nature, easily shifted in the form of rise in prices. Price becomes an engine of shifting, so inflationary in nature. Now another kind of tax is proportional tax. See, on x-axis we have taken tax base, on y-axis we have taken tax rate. So what happens is, proportional tax is that tax in which tax rate does not change with the change in income. So if a tax on all income is levied at the same rate, this is just an hypothetical schedule given to you. As the income is increasing, the tax rate is same. This is only the amount of tax that is being calculated. The amount obviously would change, but the rate remains the same. So the rate is same for all income levels. An example of such is a corporate tax, in which that is levied at a flat rate in India. Next is your proportional tax merits and few demerits. Since no rates fluctuations are there, so it is simple, it is uniform on all income, it is taken like this. It satisfies the canon of certainty. We all know what is the tax rate and how it will be taxed. It will not adversely affect the savings and productivity, since it goes with a flat rate, and will not affect the willingness to work and save more, because rates are not fluctuating. However, it will not lead to equitable and just distribution of tax burden, and is inelastic in nature. To certain extent, canon of equity would be violated. Distribution of tax burden would be even, equitable on all, and it would be inelastic in nature because rates are not changing, responsiveness would not be there. Another example, another type of tax is the progressive tax. Again, on x-axis is tax base and on y-axis is tax rate. As you can see, as the income increases, the tax rate increases, is progressive tax. So, there is a direct relationship between tax rate and tax base. To give you an example, that is the income tax, I have given the income tax slabs of 25-26 current financial year, that we know up to 4 lakhs no tax is imposed, that is the exemption limit of the tax. 4 to 8 lakh it is 5%, 8 to 12 lakh it is 10%, 12 to 16 it is 15, 16 to 20, 20. So, marginal rate of taxation in income tax is 30% with an exemption limit of 4 lakhs. So, what are we seeing? Income slabs are basically the tax base and tax rate. So, as the tax base is increasing, the tax rate is also increasing. It justifies the canon of ability, is an advantage to it. Higher income, higher taxes, inequality is reduced in the distribution of income, canon of economy is also satisfied, highly elastic, and canon of productivity is also satisfied. However, few demerits includes uncertain, arbitrary, by compulsion, will adversely affect production and discourage capital formation. See, element of sacrifice many a times comes up, and willingness to work, save, invest goes down, scope of evasion is too much. People don't declare their income and evade taxes. So, that forms a demerit of progressive tax. Then we have regressive tax. Regressive tax, as the tax base increases, the tax rate goes down. As in the case of salt, the taxes on salt during British rule. It is a kind of tax that is regressive in nature. Then we have digressive tax. Digressive tax is on x-axis again, TB stands for tax base and TR stands for tax rate. In digressive tax, what happens? It is a tax in which tax is progressive up to a certain limit. After that, it becomes proportional. As you can see, tax is increasing up to a certain limit. Income is 10,000, rate is 10, income becomes 20. Income is defined in rupees. I am saying for the convenience sake, I am taking the smaller amount. When income becomes 30, the tax rate is 20%. But after this, what happens is, even though the income is increasing, becomes 40,000, 50,000, the tax rate remains same. It can be a specific situation. There is no specific tax or an example to this, but under certain situation, a tax may behave or of the nature of digressive. Another tax that we have is specific duty tax. Now, what is specific duty tax? See, when a tax is imposed on a commodity according to its weight, maybe a cloth according to its length, size or measurement, that is a specific duty as an absolute amount. This much length, this much weight, per kg weight, this much amount of tax you have to pay. So, a duty is imposed on sugar on the basis of its weight and cloth on the basis of its length. Here, I like to draw your attention towards one thing. Suppose I am bringing stones and I am bringing diamonds. Now, if the specific duty is imposed according to the weight, what will I have to do? I have to pay larger specific duty, higher specific duty for stones, because obviously the weight of stones would be much more than the weight of diamonds. If I am bringing 10 this much size stones, so I will have so many stones of this much size and weight will be too high, and the diamonds would be like 10 diamonds will be like in my palm, the 10 diamonds can come and I can bring it like this, or in a small piece of cloth I can wrap it and bring it. So, it becomes a problem. However, the merits include easy to administer and estimate, because it is on the basis of weight or the length or the size or the measurement. So, easy to administer and estimate. You can see this much weight is there, you can weigh it, and per kg you can charge. You can, the length of maybe a cloth can be seen if it is a cloth of say 10 meters, per meter how much you have to pay. So easy to administer and estimate, convenient and easy to collect, and cost of collection is quite low. However, it is less equitable and regressive in nature. Next is the kind of tax is ad valorem. Ad valorem tax is a better tax than what we say of specific duty, because ad valorem tax is imposed according to the value of the product. As I told you earlier example, stones and diamond. Obviously, the diamond has a much higher value than of stones. So, a person bringing stones and a person bringing diamond, the diamonds are much valuable, and you have to pay according to the value of the product, not the weight of the product, not the size of the product, no size, no measurements, nothing, only on the value. More precious a good is, more taxes you have to pay. Whatever may be the size, weight, the tax is charged according to the value. So what happens is, it imposes greater burden on the rich society. So more equitable, higher value product you are using, you are paying more tax. Obviously, a person who will bring diamonds would obviously a person who is financially quite well off. So more taxes you will be doing, but it becomes difficult to administer and collect, and it leads to inflationary. Inflation, I have talked of earlier also. Inflation is basically issue of rising prices. When the prices of the commodity, goods, services seem to rise, we say it is inflationary pressure. So, as per the value of the product, if the taxes are imposed, the price of that products become high. And suppose if I am a manufacturer and I bring diamonds and carve them and make them into jewelry and sell, and I have to pay the duties on that diamond according to value of the product, so the prices would be quite high. So it leads to increase in inflationary pressure and difficult to administer and collect. So this was all for today's lecture. Taxes, non-tax revenue source, tax revenue source, types of taxes. You must be very clear, I think, and must have understood this. The suggested readings would include Musgrave and Musgrave, Browning, Buchanan and N. Radhakrishnan. That would help you to enhance your knowledge. And dear learners, thank you for today's lecture. We'll be meeting in the next lecture.